Okay, hey everyone, welcome back to the Grow Smarter podcast. If you're in the longevity or wellness space, you've probably built your whole practice around helping people live longer, healthier lives. You're obsessed with healthspan, extending the quality years for your patients, maybe not just the quantity. But here's the question that nobody's really asking you as a practice owner. What's your wealth span look like? Because helping patients live to 100 is incredible, right? But if your financial foundation isn't set up right, you might be funding those extra years in a way that keeps you working forever and not by choice, right? We all become entrepreneurs because we have this dream of freedom, and sometimes we end up in the exact opposite of that dream. Today's guest has over 2 decades helping high income practitioners stop the financial bleeding. He's the founder of Kotini Kotini, a boutique virtual family office for first generation wealth builders, and the #1 Amazon bestseller author of Effortless Wealth and Tax Efficient White Coat. His approach is called SWAN, sleep well at night. And as entrepreneurs, and actually longevity and healthcare professionals, we all know how important sleep is and how financial stress can keep us from sleeping. And it's built specifically for busy professionals who are great at earning money, but haven't had anyone help them actually build wealth from it. We're going to talk about the mindset that separates practice owners who scale from those who stall, what most CPAs miss when it comes to tax strategy and planning, and why the decisions you make in your practice right now could determine your exit value in 10 years. And we know there's a lot of interesting acquisition opportunities in the space. So whether you're thinking about it or not, your financial plan is here to stay, and you need to better understand how to put this in place. So, welcome to the Grow Smarter podcast, Paavan. Great to have you here today.
Thank you, Andrew. Excited to be here. I'm passionate about longevity and functional medicine. I'm a benefactor of that myself, and so I see tremendous value in that. And so I am really excited about today's conversation.
Yeah, so give me a little bit about your background. So, you have a biomedical engineering background, and then you eventually made your way into sort of the financial planning space. Tell me a little bit about your sort of the arc of your career and sort of your journey to where you are today.
Yeah, it's a little interesting, actually, Andrew. So I started off as a biomedical engineer. I did 7 years of research on cancer, and totally believed as I was growing up that I was going to be an oncologist. And the intent was to be able to help people and make a difference in impacting lives through medicine. Long story short, I was doing surgery on a monkey one day at the Vanderbilt Cancer Ingram Institute. And when I cut a vein, blood started spurting everywhere, Andrew. And there were 6 other scientists there. I passed out on the ground, and
Oh,
the scientists were like, do we take care of Paavan or do we take care of the monkey? 5 of the scientists decided the monkey was more important, right? And because it took us 6 months to plan for this surgery. So the junior scientist dragged me out, threw water on me, put my legs up, and just made me feel better. And, this happened a couple times, and I realized I can't see blood. And it's hard to be in the medical profession and not be able to see blood, right?
yeah.
So had to sort of look for what my next career trajectory was going to be. And not to be stereotypical, but if you're Indian, you know that if you're not in medicine, you're typically an engineer or in
Yep.
IT. So
Yep.
I worked at Apple Computers.
Oh, right on.
For
Cool.
Worked on the first iPhone project, which was really cool. But it was a segue career because that's when I realized I didn't understand much about 401ks. I didn't understand much about the financial industry, and I got very curious at that time. And so I got into finance because of curiosity for myself, but also to really help my parents out, right? My father and my parents, he had built up Capital One. They were successful entrepreneurs. And when I asked them about finance, they were like, Pavan, we know how to earn money. We know how to save money, but we're too busy to figure out what to do after that. But you're welcome
Invest
to look.
invest money, right? Manage it. There's a
Yeah.
difference between earning it saving it, and there's this whole other gray area in the middle, right? Which is really
That's
where
right.
wealth is kind of created, right?
Absolutely. And he had a number of different advisors, Andrew,
Mm,
but none of them were collaborating. None of them were talking to each other. And it was a hodgepodge of things, and it really wasn't working for him. It was very inefficient. He's paying a ton in taxes, and he was leaving. From me not being from a financial background, I very quickly saw that there's got to be a better way. And as I
yeah.
got into the industry, I learned that there's tools and strategies that multi-billionaires and multi-millionaires have access to that most mass affluent just don't. And so that became my passion, to be able to help families out in the financial space. So I didn't become a medical doctor, but I ended up becoming a financial doctor, as my family says.
Yeah, right on. Just curious, what kind of entrepreneur was or were your parents? What kind of businesses were they involved in?
So they had a variety of businesses. They had IT companies. They had
Oh, really? Cool. So
shops,
professional services as well. Yeah, yeah,
professional services. They had
yeah.
my mom had a restaurant. She was really
Yep.
famous chef here in Richmond, and so she had a restaurant. They had a grocery store, two coffee shops, IT company, and
Wow.
so it was a
True.
variety of different
Yeah.
things and serial entrepreneurship. But he helped build up Capital One as well too,
Yep.
and there as one of the VPs back in like 2002.
Wow, cool. So entrepreneurship runs in your family, and I'm just curious. Were your parents first generation immigrants? Did they come to the States? They were the first
Yeah,
of your family to come to the States? Yeah.
absolutely. So we were first generation, and one of the reasons why I love working with first generation wealth builders, right? There's just a different level of energy
Right. Right.
when you're working with entrepreneurs and first generation. But yeah, we were first generation. We came in the early 80s. Came when I was 2 years old to the United States.
Right
Yeah.
on. Cool. So tell me a little bit about Kotini and Kotini. What do you guys do? Who do you work with? What's your sort of specialty and kind of what makes you all
Yeah.
special?
Perfect. So, we are a non-traditional proactive planning family office, okay? And we focus on six primary areas. We do advanced tax planning, wealth management, risk management, legal services, business advisory, and if it's a doctor, then it's practice enhancement and lifestyle concierge. And our focus is to really be able to bring all of these elements together as a one-stop shop, right? We're not necessarily looking to replace somebody that's working really great for you, but we want to be able to make sure that we've identified all of the different areas that you may be missing out on, right?
Yeah.
So we like to call ourselves very savvy sandbox players, right? So we work really well with other professionals. So if you have a CPA that you're working with and you've been working with them for a number of years and they're great at tax filing, that's fantastic. We can just include them as part of the team, and they do the tax filing and we do the advanced tax planning,
Yep.
right?
Yep. Yep.
Significant difference between the two. And
And we'll
I
get
think
into
we'll,
that for sure into the future. It's like, some of the practices that might be listening, I was like, I have a CPA. Why would I need another CPA? But we'll get into the tax strategy and tax planning part, which, not all CPAs and tax professionals are sort of created the same. I actually want to double click on a term you just used, which was lifestyle concierge. That's really interesting to me. Tell me a little bit about what that means and what that means for you to provide that as a service to your clients.
yeah, so it's really interesting. So what we started to notice is that busy, successful professionals, right? As they're getting busier and they're getting more and more successful, they realize and they start getting very good at being able to delegate financial things to a team. They are able to delegate other areas, and some of the areas that they're looking for is how do they improve and continue to improve their executive health, right? So part of lifestyle concierge is about health, right? Part of lifestyle concierge is about like, well, I want access to custom suits or exotic cars or
Yep. I need that
uh,
allocation for that Porsche.
exactly, exactly, right? So whatever it is, it's to be able to make and improve the lifestyle of our client, and we have access to a number of different things. And so our goal is to be able to make it simpler for our clients to be able to access.
It's so interesting that you mention this because I'll give you an example. I'm working with a practice in Boise right now, and she's built up a great practice over the years, 3, 4 years, hundreds of patients, over 1,000 patients and to over 1,000 patients. And it's funny, like we talk about marketing, right? Hey, here's your SEO report and here's how your ads did last month. But inevitably our monthly kind of sync ups go to Andrew, like, I can't figure out this IT thing. Like my Google admin thing is just driving me crazy right now, right? And do you have a referral, right? More, and I'm so glad that we met. And actually, for the audience out there that's listening, Paavan and I actually met at A4M at the Longevity Fest conference this past December in 2025. We're recording this in like March of 2026, and so as professional services firms that service a lot of these
Yeah.
practices, and we work with a lot of these practices, it's very interesting to see how, as an entrepreneur, you step in and you're an expert sort of in your field, right?
Yep.
You're a stem cell or hormone balancing person or whatever your focus is for your practice and what's made you successful. But when you jump in as an entrepreneur, you don't really know all the other things that you need to know in order to be successful. And being successful could be financially, it could be lifestyle wise, it could be health, it could be all these sorts of things. Inevitably, we end up taking on a lot more things than we expected to take on. And many entrepreneurs just kind of do it on their own, right? But there comes a point, an inflection point, I think, where you are sort of building your brand, your practice, your wealth, if you would, where you're like, hey, it doesn't make sense for me to do this stuff anymore, right? And I think the hardest part sometimes is having a partner or a referral partner, not necessarily for clients, but for vendors and people that you can trust, right? To help you solve, some of these very common challenges that I think every entrepreneur, regardless if if you're running a practice or you're a professional services firm or whatever, right? So it's interesting that you provide that sort of service. Is that something that you think differentiates you a little bit from some of the other tax planning, financial planning, professionals that are out there?
Absolutely. I think, our biggest differentiator is the fact that we're able to bring everything together,
Yeah.
right? And so we won't look at things in silos. We look at things comprehensively, and we're staying true to the original intent that Rockefeller had when he first created the first family office, was to be able to bring multiple disciplines together and look at things comprehensively. And
Yeah.
so that is different from most family offices that are out there,
Yep.
that are really just glorified wealth managers, right?
Yep.
For a
Yep.
specific family office, we do the tax planning. We bring all all of those aspects together. And for doctors, we have something called a doctor's family office, right? A physician's family office, and it's really specific and niche. So it's a separate division of our firm that we focus on physicians in that space. And in there's unique things in the lifestyle concierge as well too, that really help doctors improve their practice, that improve their lifestyle as well too, because they're dedicating so much of their time and life into their practice, but they're not spending enough time into some of their personal life, and we want to be able to help them achieve that.
Yeah. So I was actually going to talk about this topic at the end of our conversation. I wanted to bring it up at the end, but I'll bring it up at the beginning because I think thinking about lifestyle and kind of as an entrepreneur, there needs to be an exit, right? And
Yeah.
there's no glory in saying like, no, I'm going to stay on this thing forever and I'm going to work in this thing until I die, right? A lot of us may think there's some glory in saying those things, but the reality of it is like, if you're building a legitimate business, regardless if you are intending to exit soon or later, you need to build a proper business that will at least give you the chance to exit, right? And one thing that I've certainly noticed over the past, probably 3 to 5 years in this space is the entrance of private equity and PE, right? And we've seen roll-up plays that are going on all across the US. They're trying to roll up under one brand, they're acquiring practices. And in some cases, the deals seem pretty good. In some cases, they don't seem pretty good, right? And
Right.
but I think the reality of it is that this sort of trend, and I won't even call it a trend, it's just something that's been going on in the space. But where do you see private equity and kind of small healthcare, small wellness, small longevity practices sort of going in the next 10 to 12 years? And I want to maybe set the context for that by saying, like, if there is this trend towards it, like, the reason why we're talking today is to maybe talk about how you're to set up your practice to give you the option to use this as an exit, right? So maybe to zoom out a little bit, what's your sort of take on what's going on in the private equity world and the healthcare and wellness and longevity space?
So we know that the industry in itself is really growing, and it's looking at, very promising trajectory. As that happens, private equity is very much interested in, and you're already seeing that in some of the traditional medical and dental space as well too, where they're starting to acquire practices at a multiple, right?
Yep.
And they're really grouping them all together. So we're going to start to see that happen over the next 7 to 12 years, where private equity is going to start getting very much interested in functional medicine and longevity. And what's really important as a practice owner is to be able to keep the end in sight, right? How do you want to be able to transition this? Do you want to be able to pass it on to your next generation? Are you looking to be able to sell it? Do you want to sell it to your employees? Do you want to sell it to a private equity? And what are you looking to be able to get out of it? As an entrepreneur, a lot of us think that our business is our retirement. However, we need to be able to build wealth outside of our retirement
Yep.
and outside of our business so that we actually have a real retirement, right? And there's a difference between physical retirement and financial retirement. And I'm not saying that you have to be physically retired when you financially retire, right? But it gives you that freedom and choice for you to be able to do what you want to be able to do. But private equity, when it comes in, there's things to be able to consider, right? It's gonna do either one of two things to you. One, it's going to give you a really good exit opportunity, right? So if you're currently in practice now and you're looking to exit in the next 7 to 12 years, it's fantastic. But you got to do things now to be able to increase your enterprise value of your organization and how you're a differentiator, and it can't be dependent on just you as the primary practitioner, right? Or two, if you don't have the end in sight, what's going to happen is that they're going to be buying up these longevity and functional medicine clinics all around you, and they're going to become your competition,
Yep.
right? And so
Yep.
you need to understand how that's going to impact your ability to be able to be competitive.
Yeah, it's fascinating that you mentioned the competition, because certainly over the last couple of years, actually, with the practices that we work with, even from a marketing standpoint, we get a lot of data, right? And part of the monthly data that we look at with our customers is, what is your competition doing and how are you ranking in Google or social media relative to your competition? I don't think it's ever been harder, actually, for practices to acquire new patients right now. And there's a big roll up play with this company Genesis, over the last couple of years, last few years. And when I look at sort of what they're doing, is they're consolidating everything under a specific brand, right? They are investing in search engine optimization. They almost have like kind of a national and then a state level and then a local sort of strategy, right? And I will say that, yeah, I mean, they have a pretty dialed in strategy to, try to take your patients away from you, or net new patients away from
Right.
independent practices or smaller practices. And so I think understanding that, hey, look, I think this field is a great field. There's a lot of attention on it, but there's a lot of competition. And the longevity space is a unique space in the sense that, you've got, board certified MDs and physicians, right? You've got NPs in the space, right? And then there's this little crossover with wellness, right? And that tends to be like a little bit of a gray area. And so I think many of us believe that, hey, look, I do great work and my patients will stay with me forever. But I think another thing to be thinking about is like, hey, there will come a time and a place where you're going to need to do more than you're doing today to keep bringing in new patients and keeping your patients, right? And sometimes, if you've been used to, as a practice owner, just getting referrals and just having your own patient base, but then you get into an environment like we are going into right now, where it's significantly more competitive, that changes the calculus on your exit strategy a little bit. You know what I mean? Because if it was relatively effortless for you to get new patients and acquire new patients before, and then you've 10 years into this practice and all of a sudden the competition has ramped up and your practice isn't ready for, you don't have an exit plan, that could leave you where you were in a really good situation that kind of turned into a headache of a situation. And I think, Paavan, like, as I learned more about you and your firm, it seems like you try to like show them that iceberg that's like, 500 miles away, but you're slowly, slowly, slowly moving towards it, right? Is that a lot of what you do, is kind of preempting some of these things with your clients?
Absolutely. So we believe in a philosophy where we call it, we plan for the best, but we prepare for the worst,
Yeah, there
right?
you go. Yep.
And so we really want to be able to look at, hey, we see that iceberg that's 500, feet away, but, are we turning right, left? Are we going directly at it, right?
Yep.
And uh, we do things that are micro strategies for now, but we also look at, macro strategies
Yep.
for long term. And we really want to be able to navigate, because most people can make really good educated decisions if they have the right information in front of
Yeah.
them.
Yeah.
And unfortunately, we're in a world where there's so much information, especially with AI and everything like that. There's so much information, but that means there's a lot of noise as well too. And how do they filter through that to identify what is important and relevant information to them today, right? And
Yep.
for tomorrow as well too. One thing I will just mention is about, when we're talking about private equity or anything like that, I think it's really interesting to note that, you know, uh, it is harder to be able to get clients today, right? Than it was maybe 5, 10 years ago. Um, and there's going to be a lot more competition that's going to continue to come. Um, and one of the things is, how do you uh, make sure that you're getting the best value, and when is the right time to exit?
Yeah.
And most people think they have a plan, and it's sort of like, uh, um, you want to exit in 10 to 12 years, but if you get a really good offer in 7 years, would you take it?
Hmm.
Right?
Hmm.
And so
Yep.
the thing is, we like to be able to understand what is the ultimate goal of the client, but we also like to be able to bring them news or insights or things like that, that say, hey, maybe this is the prime time to be able to sell a longevity clinic, right? And then be able to exit. And whereas you're getting multiples in, 4 or 5 times now, maybe a few years down the road, it's going to be less, right?
Yeah.
Um, so we want to be able to bring and paint the whole picture, and then get you to be able to focus on what's really important to you.
Yeah, so let's segue into this term that you use frequently throughout, the book that you've written, the content that you're creating, this idea of wealth span, right? And hey, look, a lot to all the practice owners out there, a lot of your patients are obsessed with their health span, right? This is a big sort of term that's been used throughout the longevity space. But in the sense of wealth span, Pavin, um, why do high income practitioners who pretty good at making money, right? Like they know what their patients want, they deliver the service, they do a good
Yeah.
job, they keep their patients. Why do like successful high income practitioners so consistently neglect wealth span? And what do you think the ultimate cost is to them?
I think, one of the most important things about understanding wealth span and why people don't necessarily put attention to it is because they think that they're already earning really well,
Yep.
and the amount that they pay in taxes and things like that is the cost of success. And that's not necessarily the case, right? So going back to taking a step back, most practice owners that are in the longevity and functional medicines are focused on lifespan and health span. Lifespan is focused on, the quantity of life. Health span is focused on the quality of life, right? And wealth span is focused on the viability of life. And it's also focused on the financial quality of life. And if you haven't thought about wealth span much, you really need what I like to call as wealth plan, right?
Mm-hmm.
And so, um, going back to your question that you had about what is the potential. So I'll give you an example that I wrote about in the book. And in chapter 2 of my book, Tax Efficient White Coat, over here, I talk about two doctors, okay? And the journey of two doctors. And one doctor, he's traditional filer. He's really done well. His clients love him, appreciate him. He's respected by his colleagues. He's doing all the right things. He's putting into money into his 401k and all of those type of things, and HSA. But he ultimately just it gives all of the every year all the information to his CPA, and
Yep.
the CPA says, "Okay, here's what you have to pay in taxes," and he thinks that's just the cost of success. And then you have another person that is focused on really trying to optimize, just like in longevity, you're trying to optimize efficiencies, right? That can help you. In this is more in terms of the financial ways. There's efficiencies that you could have. So an efficient tax plan and an efficient wealth plan. And so what happens is for two earners that are earning the same, like $350,000 per year, for example, one that is a filer and one that is a planner can make a significant difference. So at the time of retirement in 30 years, one of them could be having a net worth of $3 million,
Yeah.
right? Whereas the other one could have a net worth of $8 million. And
Yep.
the difference is the mindset, right? That it's intentional, right? It's not just by accident. It's not an afterthought, but it's intentional. But the second component of that is having the right team to be able to help you achieve that, right? Just like in longevity and functional medicine, you can't go to a traditional doctor and ask for the same things, right?
Yep. Yep.
You have to go to a specific type of clinic. You have to go to a specific type of practitioner that knows how to do these type of things. And that's what's important about Wealthspan, is making sure that it's proactive, it's forward thinking. And the idea is that if you're living longer, you're improving your quality of life. You also want to make sure that your financial wealth is able to match that lifespan and health span as well. So.
You draw that really interesting comparison with functional health, that you can't just go to a traditional doctor to get some of the things that, a lot of the functional health, longevity medicine, the folks that the A4M crowd that, we
Yeah.
sort of met are into. And, it's so funny when I talk with providers, practice owners, the thing that stands out to me in the way they approach medicine is they look at the macro, but they also look at the micro, right?
Yep.
And in a lot, it's like it comes down. There's psychological things that have impacts on your physical health, right? And they try, integrative psych and all that kind of stuff is a big part of that. And so, I think a lot of the analogy that I draw, kind of what you guys do, is the CPA is kind of the micro, right? It's like, let's prescribe a pill for that thing. It's that's what you need. That's what we've always done. That's how you do it. That's the standard structure to do it in, right? But your firm, I think, takes a look at both the macro and the micro, right? And an example of the macro might be, hey, yeah, you were thinking about selling your practice in 10 and 12 years, but hey, look, like, we're seeing these trends right now. We don't think it's going to ever get better than it is right now. So you might want to move that timeline up a little bit. Would you say that that's kind of like what, again, the value you bring to the table is being able to look at that big picture, but also the minutia as well?
Absolutely. So there is a difference, even if we're just talking about the tax base itself,
Yeah,
there's a difference between tax filing and tax planning, right?
correct. Yep.
And so there's over 80,000 pages of the IRS tax code. And, traditional CPA unfortunately knows about 2% of it.
Yeah.
Right.
Yeah.
And so they're focused on tax filing, they're focused on just compliance, and they're looking at things reactively. They're talking to you in most cases after the tax year is over, right? And
Yep.
so we in preparation for filing. Whereas tax planning is completely different. And we have specialists that understand the other 98% of the tax code. And our goal, if you think about it, don't look at it as 80,000 pages of the IRS tax code. It's more like there's 80,000 incentives, right?
Yeah.
That allows people to be able to mitigate the taxes. And Congress created the tax code to incentivize people to be able to mitigate it. But most people just don't know how to utilize it, and they don't have access to those type of strategies. So we have access to some exclusive invitation only type strategies that are really advanced and really help legally reduce and mitigate taxes, even for someone that's W-2, for someone that's a business owner, someone that is having capital gain, whatever it is, we can mitigate a lot of those taxes. And so I think the biggest mistake that, practice owners or medical professionals have today is that they don't know that they're leaving money on the table.
Yeah. So let's let's get into the tactics a little bit, right? Let's get a
Yeah,
little micro here. I always want
sure.
to leave our audience with a little bit of a tactical kind of takeaway. So, most practice owners, they are the practice. In fact, like even when I do marketing with them, they want to grow, but it's like, hey, you're gonna bring in other providers, other clinicians to work with you, and as you grow, your brand might need to be bigger than yourself now. It may not need to be, Dr. Andrews, wellness clinic. It might actually need to be, longevity clinic of, Salt Lake City or whatever, right? As you start to grow.
Yep.
And as I, got through your book a little bit more and sort of understood a little bit more about, what you all do, um, you had a really practical, and I think for most entrepreneurs, if you've done this a couple of times or you've worked with taxes before, you kind of know this strategy. But there's a really overlooked move that I think a lot of practice owners, a simple overlooked move that I think a lot of practice owners may miss. I'm not the expert on this, like I generally know about it, but
Mhm.
it's this idea of structuring like a side entity, right? Separate from your main practice, which may allow you to unlock some deductions, right? That you may not necessarily be able to unlock in your practice because of the corporate structure or because, the
Correct.
types of deductions you want to take or whatever the case are may not be eligible for deduction here. So, I'm kind of curious to understand this concept a little bit because I actually think it's an easy concept for a lot of folks to understand and relatively easy to execute. You don't need to do much,
Yep.
to get this. So what is that strategy about structuring a side entity to help with tax planning and tax efficiency and sort of how would you go about executing it if you're and what type of practices you should consider executing it, right?
Yeah, that's a great question. So, there's a number of strategies that are very low hanging fruits. This is one of them. And, being able to structure, let's just say you are a functional medicine, practitioner. You guys are doing IV, you're doing, hormones, you're doing all of these type of things, in your day to day practice. Um, but you are also being asked to speak, right? And you're being asked to consult for maybe some other practices,
Yep.
right? Because you've created some authority in the field, right? Creating a side entity, right, that is focused more so on consulting, right? And that allows you, if you ever get on speaking engagements, on podcasts and other avenues, that the effort that you do for those type of things can be taken as additional deductions,
Yep.
right? And anytime that you're consulting with other practices and so on, those could be things that are helping your practice, but in general, that you be utilizing as deductions. So if you're thinking about tax planning, there's three major pillars. There's one, it's credits, deductions, and depreciation. right? These are the three major. There's other things too, but these are the three major things, right? A side entity allows you to be able to capitalize more on certain type of deductions that you may not have through your operating business as well too, right? And
Yep.
it's an avenue as well to be able to start pulling money outside of your operating business, right? Many practice owners that we work with as well too, they may have their operating business, they may have payroll run through a separate entity as well, and they have a holding company. So there's different ways of being able to structure. That's a simple version, but based on the complexity of the things that you're doing and where you want to go, you can utilize entity structuring to be able to mitigate taxes, and not only mitigate taxes, it's also mitigating risk as well
Right.
too.
Right.
Um,
In the case of an audit or something like that, being able to say that, you did, you covered all the bases and you kind of did everything by the book, right?
Absolutely. So in terms of IRS, you're mitigating risk, but also in terms of mitigating risk, if something happens wrong with your practice as well too, right?
Uh,
You don't want your personal assets to be in
yep.
liability or accessible as well too. So you want to be able to create a wall between your personal assets and your business.
It's interesting. Going back to this concept of the mindset shift from filer to planner. I mean,
Yeah.
this is a tangible way to shift your mindset from being filer to planner, right? Because I think you separate, you set up another entity. You've got a different QuickBooks or whatever you have to account for that entity, right? You're filing taxes, separate taxes for the entity as well. That structure almost forces you to take that sort of planning step, right? Because things naturally things will get a little more complicated, right? But that's why they hire professionals like you to deal with the additional kind of complication. And net, obviously, there's a better result for the client from a financial perspective, from a wealth span perspective, from a mental health perspective, right? That maybe they can apply your sort of SWAN method, right, and sleep a little
Yep.
a little bit easier at night. Um, Tell me a little bit about SWAN. I love the I think it's one of the one thing that every entrepreneur can relate to when things are going great. Sometimes you're not sleeping well because there's always something going on that's outside of the business. If something's going wrong, you're not sleeping, right? And I think that's one of those things. And again, we talk about sleep and how important it is in the longevity space so often. But as entrepreneurs, it's so funny. I'm on a meeting on a Friday and it's like their admin day, right? And they're just like exhausted. I didn't sleep last night, Andrew, because I had this personnel issue or whatever. It's like, wait, you're telling your patients that they should be sleeping. Why aren't you sleeping? So tell me a little bit about SWAN and kind of how you came up with the idea and sort of how it works for you and the entrepreneurs and the practices that you sort of work with.
Yeah. The initial concept of SWAN came about when I realized there are times when the markets go up really well, right? And then there's times when the markets go down. And
Yeah.
just in terms of a investment and a wealth philosophy, sometimes I didn't necessarily want to be a bull market investor, but I also didn't want to be a bear market investor. So I
Yep.
thought about swan market investing, right? And this is
Yep.
being able to sleep well at night, where we're in the medium ground, right? Where we're not being too greedy, but we're also not being too conservative as well,
Yep.
too,
Yep.
right? And so that is the original time when it came about, especially in 2008,
Yep.
when we were able to help protect a lot of families from losing money when the market crashed. And in fact, we helped them grow significantly.
Wow.
And so this concept just continued to elaborate, and it expanded into how we look at wealth, how we look at taxes, how we look at risk. And the idea is, again, going back to, we plan for the best but prepare for the worst, right? And
Yep.
when we are doing that, right, it's not, in many cases, it's not a matter of if something will happen. It's a matter of when something happens, we're already prepared, right? We already have a plan in place, right? And so that's why when markets crash or when business goes down or something like that, many of our clients are not phased because they've already had a plan in place, right? And so the idea is that you are really able to sleep well because you've thought through majority of the scenarios, and it's not that you're going to know every exact scenario. You have to know what the impact of those scenarios are going to be, and we can plan for that.
Yeah. I'm curious, and maybe we're taking a quick step back in our conversation, but when is it a good idea for a practice to speak to you, or practice owner to speak to you? And let's throw out some numbers here. Like, do they have a certain net worth, revenue, right?
Sure.
EBITDA at their, EBITDA at their practice. Like, when is a good time for them to speak to you? Because and I'll lay this context. I've worked with so many practices over the last 5 years that have grown just like from being like a mobile IV clinic or a mobile COVID testing facility into like a multi-location practice. And like, I mean, I'm just impressed by their growth, right?
Yeah.
But like, these strategies may not, if you're very early on in your life cycle and you're still not profitable, obviously maybe some of these may not be applicable to you. But I'm kind of curious, actually. Maybe I might be making an assumption. When should someone come talk to you, right? Like, how much should they have a certain amount of money in the bank? Should they be doing a certain amount of revenue? When should they talk to you?
Yeah. I love to develop relations with people that are starting off, because there's so much things that we can do to help them, develop their entrepreneurial journey. But our ideal clients are individuals that have a net income of 600K and above, or they're paying 100K in taxes and above, right?
Okay, good. Good to know. Yeah.
So a lot of times that tends to be practice owners that are doing a revenue of gross revenue of about 1 million plus,
Yep.
right?
Yep.
And so that's when it makes really, really good sense. And you absolutely need to be talking to us because you are most likely leaving money on the table. And there are ways that we can clearly help you to you know, uh, help put money back into your pocket, right?
Yep.
And the other thing about it is, I would say, practice owners, just, whether they're in growth, or whether they're in exit, right? Both are really good conversations to have. I absolutely recommend anybody that is looking at exiting for us to be involved in the conversation before they exit. So when it comes to capital gain, depending on when we get involved, we may have the potential to mitigate a large portion, 70+% of it,
Yep.
right? And even maybe more if we get involved in the conversations beforehand. But
Yep.
after the event of capital gain happens, we still can help, but it reduces those number of opportunities.
Yeah, so that's like, you end up selling hey, maybe it makes sense to earn it out over a certain period of time, right? Or stay on as a consultant and take some
Yeah.
of the transaction fee as a consulting fee rather than taking it as a lump sum, right? Like, you may want to just like cut out and run as quickly as you can, right? But sometimes it makes sense from a financial perspective, and actually, even from before I got into the agency world, I was doing like small business M&A, and it was shocking to see sometimes how much just they wanted to get out of the business, even though that would cause
Mhm.
some really bad tax implications to them. And frankly, even to the deal itself, right? Like, a lot
Yep.
of times, the buyer of the practice is a lot more willing to make the deal a little richer if the owner is going to stick around for a little bit, and there's a little bit of an earnout structure in place. So that's just like one scenario, right? But I'm sure you all have seen many different types of scenarios and many practice owners with different mindsets. But I think you're right. It's like you haven't scored a touchdown, you're in the end zone, right? And if you want to maximize, what you've built, right? You want to, either you want to kick the field goal or you want to go for the 2 point conversion. And if you want to go for the 2 point conversion, like, you should know what the risk is, right? You should know
Yep.
before you sell it, and before you incur those capital gains.
Yep.
No, that's really good. Really good for people to know, because don't wait until you get to the finish line to start thinking about planning, basically, right?
Absolutely. So I'll tell you two stories. One story of an
Yeah.
individual that, he's a physician. He was about 56 years old when he came to us. Came at the last month of the year, and he had just sold his
Oh,
practice,
yay. That's
right?
always fun.
Heard about us in a Christmas party from somebody,
Oh, cool.
and so
Yeah.
it came to us, and so he had just sold his practice,
Okay.
and he wanted to mitigate some of the capital gains. We were able to mitigate in his scenario 100% of the capital gain, right? And he was looking to sort of jump. He sold his clinic, and then he wanted to jump back and buy another practice, right?
Oh,
And
interesting.
we were looking at it and said, hey, what is your ultimate goal, right? What do you want to
Hmm.
be and what not? Because he had spent so many years dedicating his life to be able to in working and whatnot. And we realized that, from his exit, from the strategies that we were doing and the tax efficiencies that we were able to put into place, that he could actually retire, right? He doesn't need to go to work, right? Back again. And so we were able to bring that to him, and he was sort of like caught off guard because he thought, he still needed to work, when in reality, whatever we have today, we were able to make it work for him. So he's worked hard for his money. Now his money can work hard for him. And so
Yeah.
he was able to actually retire. And his wife was also a physician. She was like, "You're telling me that, all these years we've been told to save, 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 save. And now that you're not working, you're telling me that it's okay to spend and it's okay to retire now." And it's a different paradigm shift. And
Totally. Yeah.
so we love to be able to not, we don't like to be the yes men. We
Yeah.
like to be able to bring thoughtful analysis to you so you can make educated decisions.
Yeah. And what you just said really resonated with me because I think, again, this goes back to this idea like when we start a business, we're an expert in something, right?
Yeah.
Otherwise, people wouldn't pay us money for
Yeah.
us to do what we do, right? Um, but it's so funny because like you talk to the doctor, they're an expert, and then but you realize as you talk to them more, like they know nothing about marketing. They know nothing of like they're just like elementary school education sometimes, right? And you're like, wow, you're such an impressive person. But and a lot of times I think, especially when it comes to money, money is such a weird thing, right? And you come from an immigrant family, I come from an immigrant family, and my dad was a banker, right? Was an investment banker. So he came from a very traditional, he was the exact opposite of an entrepreneur, right?
Yeah.
Definitely worked around a lot of entrepreneurs and, but was not he was sort of the risk adverse type of person, right? And so I think when you think about money and people's relationship with money, it's almost like you're almost ashamed sometimes to talk about it, even if you're doing a good job, right? Because you're almost like ashamed in a way that maybe I'm not managing my money efficiently, right?
Yeah.
Um, and so I think when you get to a point where you've seen some success in your practice in your field, it's time to maybe let go of that insecurity in a way and ask for the help, right? Because
Totally.
many times you just don't know what you don't know, and we have these weird psychological things around money. And and I think for you, Pavin, especially just like a doctor, right? Like they really have to open the kimono up, right?
Yeah.
For you, and like really give you an insight into all the good decisions and bad decisions, and the history of everything they've done. So I think if you're a practice owner out there, and maybe there might be a psychological block maybe to you finding someone like Pavin, right? You might know like, hey, I've grown this thing, but I'm not really thinking about the future. I'm just trying to stay alive right now with the practice that I'm building and growing. Um, and I think Pavin gave some really good insight into, hey, look, if you're doing, a million or more in gross revenue, right? Like you probably need to talk to me because there is some money that you could take off the table for yourself, right?
Totally.
Um, so I think that's a really important thing. Is this psychological thing behind money and just knowing what your weakness is and not being ashamed of that and knowing that's why, people like Paavan and his team exist, right? Is they're the doctor expert that you go to and kind of undress in front of, and then they'll take care of the stresses related to that because you're not an expert at this stuff, right? You can watch as many videos as you want to, and you'll understand it in concept, but to actually execute it and do it and see it and manage it well, you need a professional, just like you need a longevity professional if you're getting stem cell therapy, for example, right?
Absolutely. I think, we can't all be the expert at everything,
Yep.
we can't, be the jack of all trades. So it's important to recognize that you have an expertise as a practice owner, as a physician in the medical space, right?
Uh-huh.
Um, and there are other people that are really good at being experts in other areas, whether it's plumbing, whether it's finances, whether it's anything else, right? And you can certainly do things DIY, right? But in many cases, we outgrow that. And it's
Yeah.
not that you don't have the ability to. Sometimes it's about access, and it's taken you years to be an expert as a medical professional. Maybe you've gone through residency, you've gone through so many different things, and it's taken us years to become experts in this space, and we do this every day. All right.
Yep.
And we still feel like we don't know enough, right? And we're still always learning something new every single day.
Yeah.
So I think it's okay to everyone to understand that, hey, I can go to an expert, and it's okay. We do not judge when somebody has a problem, right? In fact, our goal is to be able to help you solve that problem. But you
Yep.
got to be honest with yourself. And, if you think about it, and if all the, clients that you guys are seeing as medical professionals, if they're embarrassed about sharing their problems, that's going to be really hard for you to be able to do
You
your
can't
work.
diagnose them,
You can't
right? Like
diagnose
if there's symptoms that they've got to be able to tell you, your labs you can only evaluate so much through a tax return,
Yep.
right? Like there's other insights that you might need to know about their lifestyle, do they have parents that they need to take care of in the future, right? Like there's all these other considerations that you've probably seen so many, just like a functional medicine doctor, right? They've probably seen so many different combinations of things that are unique to that one patient, which I think makes that special, and which makes them special to that patient because they're able to kind of take that whole body kind of look at things. And I think that's pretty awesome that of what you've built, Paavan. And I think that, again, as a marketing person, I always love looking at other businesses and seeing how they've positioned themselves and messaged themselves, and from fainting on the floor, from seeing blood, to helping doctors who can't deal with the blood, right? That's a pretty cool arc. I'm curious, Paavan, I'd like to know, so let's say that there's a practice owner that hears this, they want to sign up with you or they want to talk to you.
Sure.
What's your process? What's your approach to bringing in a new client, and sort of like, how do you get started with them, and what do you do with them initially?
Yeah. So similar to medicine, the first thing that we want to do is have an introduction. We want to have some initial diagnostic to see if this is a good fit, right? And we will be very honest and truthful in that. And so that's about a half an hour, just introduction, just to see personality wise, all of that, if this is a good fit, and just share with you a little bit about what we can do. And then from there, if we feel that that there's a potential good fit, we do a deeper diagnostic. Just like in functional medicine, you're going through a lot of diagnostic testing, and we go through a lot of different things, and we comprehensively look at everything. And then ultimately we come out with a proposal, right? That's going to explain our fee structure, that's going to explain the ROI and the scope of work that we're looking at accomplishing, and what the outcomes could potentially look like. And really, in most cases, when people get to that point, it becomes a no-brainer, right?
Yeah.
Because they clearly see that anything that we're doing is going to really give value in the multiples to them.
Yeah, it covers I don't know, your clients pay you a retainer or whatever, however your model is, but same thing with us, right? Like we're hoping that we're making you more money from marketing than you're paying us.
Yep, absolutely. So,
That's what it comes down to, right?
and we've seen that over and over again, and clients are ecstatic about that. So
Yep.
A simple way to be able to reach out to us is to either email me at Paavan at KotiniandKotini.com, or to reach out on our website
Yep.
as well too. Or if you decide you want to learn more information, you can always look at, Tax Efficient White Coat or Effortless Wealth books on Amazon and
Yep.
read it and see if that makes sense to you. Um, if those stories resonate to you and you want to learn more, definitely reach out to us. We'd love to be able to have a conversation and see what the art of the possible is for you. And our ultimate goal is to protect your most valuable asset, which is time, right?
Yep.
And so that's our goal, to be able to do it, and to also do it in a way that we're making complex simple, right?
100%. Yeah, Pav, and that conversation went so fast. Thank you so much for spending time with us. And if you're running a longevity or wellness practice and you've been putting off getting your financial house in order, I hope this episode was a wake up call. We talked a lot about the Wealthspan concept, and that concept alone is worth sitting with, right? You help your patients live longer, but your financial plan needs to be able to keep up with the life that you're trying to build. So, as Pavan mentioned, if you want to connect with him or explore what his family office and approach might look like for your practice, go to his website, kotiniandkotini.com. As he mentioned, his books, Effortless Wealth and Tax Efficient White Coat, are also on Amazon. And, this whole Grow Smarter podcast is all about helping practice owners grow smarter, right? There's a lot of aspects of growing a practice. It's not just about the modalities and treatments and vendors that you work with. That is literally just one part of your business, right? Growing smarter means thinking about your marketing, thinking about your financial planning, thinking about your tax planning, thinking about your operations, right? And as Pavan mentioned earlier in this episode, there is a lifestyle around running a practice. And that's why he's built the kind of a lifestyle sort of concierge part to his business. So Pavan, thank you so much for joining me today. We'll be on some other episodes and we'll be talking through some other interesting avenues as it comes to financial planning, tax strategy, and all the unique things that you and your team do. So thank you for joining me here today. And I look forward to speaking with you again.
Thank you, Andrew. I really appreciate it. It was a great conversation. I didn't even know that an hour flew by. So
Yeah,
enjoy.
great.
Awesome.
Awesome.
Thank you.
Thanks everyone. We'll talk to you next time.